Welcome along to the next in this video mini-series, Finance Innovation Insights powered by Brightstar Financial. And I'm joined by Head of Bridging at Brightstar, Kit Thompson. And Kit, bridging is a tool in a property investor's toolbox, and increasingly we're seeing landlords and property investors reaching for it.
Yeah, I think post 2008, especially in the credit crunch, where the mainstream lenders moved away from any appetite of risk, is when you saw specialist funding such as bridging short term really come into its own, and a whole plethora of lenders moved into the marketplace to kind of fill that funding void, if you like. And since then, the bridging market's just grown, exponentially, really, year on year. So we're finding more and more landlords and property investors are looking to maximise on that, where traditionally mortgage lenders would have been in that space.
Indeed, and finance is the lifeblood of any property investor's business.
Yes.
And knowing the products that are out there, even if they're limited edition or specialist ones, can really help a landlord grow more quickly. Yeah,
definitely. I think traditionally, if a landlord has only utilised buy-to-let funding and traditional mortgage funding, they may not be as aware of the bridging products that are available, although it's become more and more mainstream. It's far less of a niche area. But certainly in terms of anyone looking to go for a change of use, property renovation, traditionally you could fund that under mortgages, but now it's almost impossible without full retention for traditional mortgage lending, which has left a lot of landlords and property investors thinking that they're unable to effectively refurbish property and make money from it, which isn't the case.
Indeed. And part of what we want to do in this interview is kind of make bridging less scary, because with my landlord hat on, I've always been slightly fearful of it, but there are some good products out there. We're talking about one specifically. Just remind us of the features of the product we're highlighting through the video series.
Okay, yeah. So we're looking specifically at Precise, and they have two distinct different bridging products. One enables light property refurbishment and the other heavy property refurb. So we're specifically looking at clients who are looking to take perhaps a rundown property that could just need a new kitchen and bathroom, or it could be a full-blown, effectively a rebuild, including things like basement digs, loft conversions, two-storey extensions. So there's two very distinct areas of classification in the products, so it's probably easier to talk about them one at a time, if that's okay.
Yeah, but also I think what's so powerful about this product is it has the term finance attached to it, and that, from my perspective, with my landlord hat on, again, it kind of takes that fear factor out, doesn't it?
Yeah, I think the biggest thing, obviously, when we're looking at placing bridging finance, and as an investor looking to take bridging finance, your biggest concern, obviously, is getting out of that on time. And the product does have a guaranteed exit route, so of course they're still free to refinance to any buy-to-let lender if they're looking to retain the property as part of the portfolio, but it does give them the guarantee that there's a guaranteed exit with the same lender at the end of the refurbishment. And not only that, the money that's been spent on improving the property, they can actually capital raise from the enhanced value when they refinance to buy-to-let, which is really good because you get your cash out of the property.
Well, indeed. Let's just do as you say and dig down a little bit on the difference, because lenders talk about light refurbishment and heavy refurbishment. So tell us a little bit about what light refurbishment covers.
Yeah, generally, I mean, the classification does vary from lender to lender, but generally we're talking about works that don't require planning consent, don't have any change of use. For example, if it was a vacant pub, for example, there's loads of them closing at the moment, it would need change of use to become residential flats, for example. So that would automatically be deemed heavy refurb because there's some change of use. But if it's already residential and it just needs generally kitchen, bathroom, rewire plumbing, internal walls, that kind of thing, redeck carpets, the usual, then that would all fall under light refurb. So there's an awful lot of work that can be done under most lenders' definition of light refurb in order to get the property up to scratch. And again, they can borrow towards the property purchase, but they can also borrow towards the cost of works as well.
One thing that a lot of landlords are really sort of optimising at the moment is the permitted development rights. Tell us a little bit about that.
Yeah, I mean, the PDR, permitted development rights, was a government incentive to basically make the planning permission rules a little bit less stringent and more relaxed, if you like, so that homeowners and landlords were able to maximise the value of their properties via what would have been full planning applications previously. And initially, when it was launched, it was an incentive for commercial office space to automatically have change of use and planning agreed for change to residential. So in most towns and cities throughout the UK, there's an awful lot of vacant commercial and or office space, and the type of properties that we see, whether it's high street or sort of secondary high street location, would typically be retail, commercial, ground floor, and perhaps 2 stories of offices above. So that would be a classic PDR conversion scheme where the landlord could acquire that vacant commercial site and convert it to residential upstairs without going for a full planning application.
And I think we're going to see so more opportunities there as well, because we're hearing just this week that a lot of high streets around the UK are struggling.
Yes.
And there's going to be opportunity for landlords to go in to these kind of properties and, as you say, do mixed use, semi-commercial. And these are all things where landlords definitely have to raise their game, and understanding the finance that helps them does that.
I think just understanding that traditionally a lot of landlords will probably have sought out 100% residential properties for their portfolio.
Yes.
Or you would have had landlords who favour commercial property.
Yeah.
And you get commercial landlords who have got a host of whatever it is, off licences or laundrettes or restaurants or whatever. Sometimes we see portfolio with a mix, but there's a bias towards residential usually, and they might have 1 or 2 commercial assets. What this product does and what PDR does is enable investors to look at mixed use property effectively. And from a landlord's point of view, you're definitely maximising you're spreading the risk, but you're also maximising the yield, because you can get long-term commercial tenant on the ground floor, for example, might be a restaurant or some other trading business.
Yep.
But 3 or 4 flats above, obviously on ASTs, and then you're spreading the risk on the portfolio.
Yes.
So it is good.
It is good. I like the sound of that.
Yes.
Now you've got a little case study for us that of how this product has helped one of your development clients recently,
Yes.
And that was to do with the purchase of a commercial premises.
Yeah, it was secondary high street location, so just off of High Street here in office in Billericay, live in Southend, so in Southend-on-Sea. Former commercial retail space, double fronted, been vacant for quite a while. Purchased with the aid of a bridge. It was £715,000 purchase price, and like the example I gave earlier, 2 floors of vacant office space that had never been utilised but as part of the commercial space. We arranged £400,000 towards £715,000 purchase price via the bridge, and then they had an additional tranche of funding to cover the conversion works, and again under permitted development rights they were able to turn 2 floors of office space into 3 residential flats. What often happens with PDR is certain works are allowed. Most developers will probably look to put in full planning application, which is what this guy's subsequently done. He knew he could buy it and under PDR get 2 or maybe 3 residential flats above. He's actually started work on that under PDR and then gone back to the local authority and said, if I demolish a bit of the rear and put a 2-storey extension on under full planning, I can get an extra 3 masonettes here, and that's now been approved, so we're looking to fund that as well. So he had an initial tranche to purchase the property. He had a second tranche of funds that was taken in 3 or 4 stages, so subject to re-inspection on valuation, uplift in value, confirming that it's actually gone up in value, and he has progressed works and released in stages. And again, they are only being charged interest on the money that's been utilised, so whilst the funds are sitting there not used, you're not being charged for them effectively.
Wow, that's really inspiring. It's really great to hear landlords thinking creatively like this. And I guess just to close this out, Kit, again, we can't stress the value of a broker that understands these products, how to use them, how to support a landlord in implementing them.
Yes.
So again, we want to stress that professional advice can help landlords grow a lot more quickly.
Yeah, I think traditionally it might have been the sort of thing you would go to the high street for. There's very limited appetite still. I'm not saying the high street aren't lending on these type of deals, but what you will find with high street is their appetite is limited at circa 50%, I would say, loan to value on these type of schemes. And of course the timescales, if you speak to the commercial guys, they will say that it will take, I won't mention names, but up to 3 months, for example, to get offers out. On the short-term side, on bridging, we're used to funding deals, writing them and funding them, certainly within 4 weeks. So, sometimes it's 2 or 3 weeks. So if someone needs quick property funding, whether it's auction or there's just a completion deadline, we can do it quickly. And again, it's quite specialised. So do, you know, seek specialist advice from a specialist broker. And again, here we segment the business into the different sections, which is why you've spoken to some of my colleagues.
Yes.
But I'll look at the development and the bridging and the short-term side of things, and then once that deal's completed, hand you across to a long-term buy-to-let specialist, which we find works best.
Fantastic. Well, thank you so much
you.
for sharing those insights. It's been really, really interesting talking to you. And I hope we've gone some way to maybe encouraging you guys watching out there to consider bridging finance, because as we said, it's a lot less scary than it used to be. There's some great products out there.
You know what? One of the main things is the cost of bridging funding. We haven't really talked about the costing, but it is cheaper than it's ever been.
Yeah.
The bridging sector is absolutely awash with cash, whether it's from high net worth individuals, whether it's from hedge funds or corporate banking lines, but it's an area where there is more money than appetite for lending. All the lenders we deal with are like, we're awash with cash. We want to fund deals. The appetite's genuinely there. There's absolutely no shortage or lack of appetite in that sector. So, and you know, rates start literally from around 0.5% a month or less. So we're talking 6% per annum on bridging finance. When I started doing bridging 5 years ago, it was 1.5 to 2% per month.
Wow.
So we are talking annual rates of somewhere between 6 to 9% in most cases. It's it's never been a cheaper time to take bridging finance, certainly.
Well, that's fantastic news, and thank you very much to Bright Star Financial for powering this discussion, and stay tuned, we've got more videos to come.
Thanks.